given the geopolitics and given this central bank diversification, like Charles de Gaulle back in 1970s. Anybody can conjure up a few $1 billion and make a run at silver, and even a few hundred billion at gold is a drop in the bucket.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics as we continue our coverage of the gold and silver markets in another week where we have $30 plus silver. We saw on Friday price come closer to 30 bucks, has been over 32.50. Again, the culmination of what's been a rally that really began mid-February, something that today's guest, John Lee, and I have been talking about for years, and nice to see some of that finally happening. A good time in the gold and silver world, but obviously things are happening quickly, and we'll dig into what has happened as well as what we might expect going forward. So before we get started, I'd like to welcome you on in, John. It's great to see you again as always. Now with $30 plus silver, and how's everything been going with you?
Chris, good to be back on your show. I can see you're basking in the beautiful Florida sun. Um, Silver staged a sneak attack. I think it was a couple of weeks ago when it went from $28 to 32. I think it was on a Friday. And the silver bulls were undeterred and launched that attack to 32 and a half. And since then, it's been treading sideways. Very, has quite a lot of volatilities. And if you were to see what happens, which is normal for silver every time it takes out 30. So this kind of volatility is to be expected. I had thought that silver would take out 32 to take to challenge 35 and beyond. However, we're seeing a reversal of copper, which had staged what is now seen as a big breakout. Therefore, the judge is still out there as to whether silver is going to make an assault past 35 to 50, as always done, as it has always done in the previous two occasions when it takes out 30. So overall, the glass is always half empty, half full. There are some good things about going for silver, technically having taken out $30 resistance, which is not support. But on the downside, we're encountering a weak seasonality. And also as well, the dollar is hovering on a very strong 200-day moving average support. So these two things are sort of kind of going against silver. And on the bullish side, again, of course, the fundamentals for gold and silver, and that is I think this time is a little different than what's before. The judge is still out whether we have to wait for a few months or till September when the traditionally strong season returns for gold and silver, or the metal is ready to take the next step to a much higher level from here.
Okay, and I want to come back to some of the dynamics around the $30 level. Although before we do that, quick note, we're recording Monday morning. So we have at the moment 23.63 gold price. And John, I would love to get your feeling of what you think drove the silver rally. My own personal view, I think there was a point where gold goes up so much, silver has to finally eventually move. Again, it's different than past rallies. If you look back to 2020, we had the Fed responding to COVID, government spending a lot of money. Been the opposite of that with rates staying higher for longer. My personal view after thinking about this a lot is that, yeah, the gold rally, there has been the central bank gold buying. I also feel the move towards confiscating Russian frozen assets, as well as now Russia responding with sanctions of their own and things like that have combined together. Obviously, you have the silver deficit that continues on. So, but with that said, I'd love to get your view of any thoughts on the gold side and what really drove silver here.
You captured the essence in a good summary. Gold has been trending above 200-day and 50-day moving average since November. So gold has been acting very strong from 1800 really nonstop to where we are today at 2400. And it's reasonable to expect a bit of a breather at 2400, which is my level target when I tweeted in January 4 months ago. And technically speaking, if you look at the neckline of gold, which is 2000, and you have a very clear, obvious cup and handle formation, and so the bottom of the cup is 1600, so with the neckline of 2000, so if you flip that on the other side, on the linear scale, the gold target is 2400. But on the log scale, then you're looking at another, it's 25% up from 2000, which will peg gold at around 2600 to 2800, which maybe it should be the target for gold at 2,800. The fundamentals for gold, I don't see as inflation play as much, but rather it's a diversification by the central banks. I mean, the Saudis and the Japanese and the Chinese is having second thought about holding the U.S. Treasury and the U.S. dollars as their reserves, and Hong Kong, having seen $300 billion went poof, right, of the Russians' money, and literally the SWIFT system would just turn on the flip of a switch. They're shut down of the SWIFT system. If basically their money is gone and on the push of a button, and collectively the Saudis, the Hong Kongs, the India, the Brazils, I mean, and the Middle East collectively well over $2-3 trillion of reserves. So even if just a smidge of that going to gold, which I think they are doing happening right now, is going to have a profound fundamental physical accumulation happening. And also besides that, you have the Jeff Bezos, the Koch brothers, you have Warren Buffett, right? They're not going to be openly advertising about buying gold. But if they see central banks are buying gold, their central banks buying gold, they're going to front run that, and just to circumvent the micro mandates from the digital currency. From there, people are getting so wealthy now. The cartels and power that be have to have another instrument to sort of keep the checks and balances in place. And the way to do that is through carbon credits and through digital currency. I mean, they certainly don't want to be crowded up by the peasants when they choose to go to vacation in Venice or Paris or New York for New Year, or South Africa for their windsurfing lessons. And now everybody has a few $100 to spare for travels, and just make their lives a lot more inconvenient. So that's why they gotta have these micro mandates with the digital currency and the carbon credits, so that they can continue to impose their will on the people. And through that, gold is really the only way to sort of circumvent these controls. And that's why you're seeing gold is acting very strong since November. The critical level of support for gold right now, 50-day moving average is 2345, and the 200-day moving average is about 2070. Like I said, seasonality is playing against gold as well as a rising dollar. I don't think the Fed is maybe not even going to raise rates at all. Certainly not going to cut rates. Not going to cut rates at all. Maybe start raising rates before the end of the year. Certainly, at 2025. So all these are a bullish case for the dollar and bearish case for gold. Right now, for me, I see a coin toss for gold. Whether gold is going to breach the 50-day moving average at 2345 and then go back to. I don't think it's going to go to 2045 given the fundamental. A lot stronger this time, and it's definitely a paradox shift that's 40-50 years in the making since 1980. However, I would not be surprised to see in the summer doldrum that gold is taken down to the $2,200 level, $2,200 level. And if that were to happen, then silver unfortunately is probably going to claw back to around 28, which is the 200-day moving average, and could dip to $25 range, which is slightly above the 200-day moving average of 24. Just one note about silver. Silver has been laggard to gold. I would expect silver to challenge 30 in January and February when gold took out $22,000 definitively. My view on what happened to silver is being dragged down. It's being dragged down by the Chinese fallout of the real estate market. So what's happened to China from late 2023? From mid-2023 to early 2024 is a replay of what happened to the financial crisis in the US in 2008, 2009. So that really put a damper on silver in both the fundamentals, industrial demand, and also in speculative interest from the retailers in China. So all these confluence of factors put a damper on silver until until March, April, right? When there's a reflation of the Chinese economy, when there's a bottom out of the Chinese equity market, and a bit of a reprieve from the real estate fallout, and that's why you're seeing silver is playing catch up. I don't see that strong fundamentals, physical industrial demand for silver. And the reason I say that is the industrial metals has been very weak across the board in oil, in other base metals. Even copper has been quite weak until a week, 2 weeks ago when it staged that breakout. I don't know whether it's going to retest the support or it's a fake one. So I'm having a mixed feeling about silver. Nonetheless, having said all that, we're long silver, just not betting the farm on it. You've got to be mentally prepared for silver to make a correction to the $28 and maybe briefly to 26. You've got to be able to stomach that volatility and maybe with some cash to spare to double at there. But I would rather double up for when silver break out 32, right? Definitively. But it's a difficult thing to trade because, as you know, silver is known to have a fake breakouts. But then if you wait for a couple of days for the confirmation of the breakout past 32, you could be looking like 38, right? By the end of the week. Then you're in this dilemma of, what am I going to do? So having said all that, you cannot be out of the silver right now waiting for a rebound, given the geopolitics and given this central bank diversification like Charles de Gaulle back in 1970s. Anybody can conjure up a few $1 billion and make a run at silver, and even a few $100 billion at gold is a drop in the bucket. However, technically speaking, gold is a bit of a precarious sitting on that 50-day support, and silver is a bit of a no man's land right now. And we got to wait to see how it plays out.
Well, yeah, and it's interesting how you mentioned this has happened at a time where there are even rate hikes being considered, and the impact, though, that if even in the face of that, you've still had the strong demand for physical silver, particularly from the photovoltaics in the solar panels. So even at a time where things are weakening in China and starting to slow down, even according to government figures here in the U.S., still despite that, you have the big gap that we've had. Although, John, one more question on gold and China before we get back to silver in the $30 line. We've seen the reports of certainly the private buying in China, and again, I think it's a little murky, the data we get from the Chinese government, but adding to their reserves. Although you had a different view of what you're seeing in China as opposed to some of the reports we've been hearing, and certainly people piling in at the mall buying a lot of gold, and perhaps you could share that again.
I haven't been to China in the last since the pandemic, since the year 2020. I'm Taiwanese, so I'm also a little bit apprehensive with the current tension going on. I could be snapped by the communists and seen as a spy, and there's now a very few recourse. From what I see from Taipei and elsewhere in Asia, though, there is definitely more interest in gold than silver. And So I'm not in a position to share with you any insights on Asia silver buying from Asia, but there's definitely interest in gold if you just type gold Korea, gold Japan, gold uh, China, and you can see that in Korea, even on the 7-Elevens, you can buy the little sort of you can buy the little nuggets, right? The little gold bars. But in the end, and Chris, you mentioned about silver, in the end, it's always the physical demand. And right now, gold to silver ratio has been very persistently high. It's still high right now at around 80, which is above historical average of 70. That just tells me that this bull market is not driven by the mom and pop retails, not by the gold bugs retail. This is a major diversification from the power that be by the well-to-dos, much like a tactical allocation back in year 2000 when Gordon Brown, Bank of England, dumped that 200 batch of gold at 200, 250. And very similar back then, I don't know if you remember, I remember vividly that gold made a run from 250 to almost 500 in early 2000. But silver really didn't do much until about 2 or 3 years later in 2004, 2005. I remember that because I was buying some silver eagles at $7 an ounce and silver was less than 5. And I was just like, this is a no-brainer, right? I bought a whole batch. And I started, and the silver stocks actually started to I dabbled into silver stocks, right at that time. So right, this is not abnormal. My point, that's my point I'm driving at. That silver is laggard of gold. Every major run up, by not by the retail, always started with gold, and that's why I just see a very hard. I just having a hard time seeing gold going back below 2000. I see maybe potentially 2200. That's probably as low as it would go. So if gold ever to get there, whatever silver price is at the time, and that would be your time to double up. So right now it's still much. I think the gold right now, at this 2300 level, seem to have a fairly strong support. You're not seeing the level of volatilities that you see with silver. Silver is a bit weak. Maybe you and I see it differently, but I don't see it's the industrial demand that's driving silver, but rather it has to be, and it always been the investment demand that drives silver because at higher silver prices, people always find substitutes, and then economics 101 is only the investment demand. When prices are higher, investors buy more. Whereas industrial users, the price go higher, right? They buy less. So we got to wait and see whether the real physical silver like big boys to step up to the plate. And but you never know. The silver could be hovering this level before marching to the next higher levels, but you never know. This kind of silver sneak attacks, you never know. You just don't know what the natural level of silver, which certainly will not be $30. So that's why you have to have a position, because blink of an eye, silver could be trading at 50 and stay at 50 for as the next level forever. You never know. It's a very difficult market to trade.
Yeah, and interesting what you mentioned there about the investment demand, which certainly has not been the case on a retail level. A lot of physical silver selling to the dealers. Although one other thing that I would point out is interesting, the banks have been talking about gold and silver for the better part of a year now. Here was
Yes.
UBS last week raised their price target to $36 an ounce from April, I believe this was. Here was Citibank. We further lift 6 to 12 month topside levels towards our bull case scenarios of 3,000. So this is being seen. It's not just you and I and a couple other YouTube channels talking about silver anymore. This is going out to the banks. John, did you happen to catch that TD Securities report about a month or two ago, where the author there talked about the next silver squeeze because he was looking at the deficits, the declining inventories? So we see that this is getting put out there, even and price rising, even without that physical investment demand. Not seeing it show up too much in the ETFs either. Although, John, with all that said, we'd love to. You've talked about this a little bit, but what do you make of the fact that finally got through 30, yet different from what we saw in 2021, where it got through 30 for a couple of hours and then it was 3 years before we saw it again? I would think that, in my opinion, that's certainly a good sign, but anything you could add there?
I certainly will have a stronger conviction if copper's breakout is genuine. And so we don't know right now. Copper went from 460 to 520, and now it's back testing what it was now as a support. So the next few days will be a critical observation on whether this correction in copper is just a garden variety of retesting support, or is heading, or if this correction is gonna turn into something more sinister. And
Do you think we've
technically,
reached, sorry to interrupt, but do you think we've
yep.
reached a breakpoint? Obviously, we've heard similar dynamics in copper supply and demand as to what we've been talking about in silver. It seems to be getting exacerbated lately, but how much of this is driven by that?
I don't know. I looking at the weakness of oil, and that's a telltale sign that this time around you're not seeing these kind of rebound of the economies. And I don't know, the jury's still out. The way I look at it, it could be a blow off speculative interest into copper and silver riding on the gold breakout as a blow off. You can interpret it that way. Um, and or you can look at it as a genuine next phase of the bull market for base metals, of which there's a breakout above 30 and above $5, and now they're retesting what is our support. I think the question for me is whether silver is going to follow gold higher from as an investment demand, or silver is going to follow base metals and oil, which is weak. And people talk about recession and whatnot. I really don't follow recession talks, but to me, what I've observed, this is not a typical rebound of what we saw post 2021, or post 2000, like a previous recession or previous sort of shocks. You're seeing a very tepid sort of rebound on economy from the auto sectors, from the loan, from just overall general feel of the economy. So I don't know, but one thing though, Chris, I don't read too much into. I don't not only read too much. I don't read at all. I don't watch television anymore because these pundits, I mean, the power that be, the invisible hands, they're very few and in between. There are not many people, right? So they cannot control the narrative. They cannot control every single piece of mouthpiece out there. Kind of like it's kind of funny. You can type. I'm kind of into health nowadays. I'm 50, so I kind of look for ways I can sort of elongate my tenure on this planet. If you were to type garlic good for you, and you're going to see a slew of articles. You can see garlic bad for you. And you're going to see, oh, garlic will raise your blood pressure, whatever. Same for gold. If you type gold is going up, you're going to see all the different articles on gold is going up. If you see gold going down bearish, you're going to see all the articles going bearish. So it really just doesn't mean a whole lot. Like I said, the gold glass is always half full and half empty. In my view, gold is money. Silver is money. It's been tested, tried, and true. The path is inevitable. But the question is whether it's imminent. You can make a call on silver, which is 50, and gold at 2,800. It will definitely happen within the next couple of years, in my view. The question is when. And very few people can get it right in timing and the call. In January, I made the call, go to 2,400, silver take out 30, because technically speaking, gold and silver were resting on this very critical support level, right? So like I said, I think that the confidence call would be a lot higher if gold and silver were to fall back to 200-day moving, which is 2860 for gold and then 2450 for silver. I don't think it's going to get there. But if there's a very sudden dip below 50-day and getting back to 200, that would be a lot buying opportunity. One more thing I just quickly mention is silver. You're looking at industrial investment demand for silver is only 300 million ounces. So that's the $9 billion. It's a drop in the bucket. I don't think one can really microanalyze all those things, right? It's common things only happen in hindsight. Nobody really knows what's going to happen tomorrow. The cartels wake up in the morning, they can only hope that there's not enough paper interest to overwhelm, and then couple with physical. They don't know. Nobody knows. Like cartel never thought gold, silver would take up from 28 to 32 2 weeks ago. Nobody knows. So right now, what they're doing is damage control. They don't know. They just try to exhaust the paper buying, hopeful that the physical buyers don't show up, and then they put the lid back under 30. They will try to do that like they did in the last couple of days, right? They wiped the silver on Friday, down 3%, even the dollar is down. How many times they can do that? We don't know. Like I said, we have to wait until if the silver physical buyers step up to the plate. Clearly they didn't on Friday. Maybe they're retreating to the Hamptons and whatnot for the summertime to pick another battlegrounds in September. I don't know. We'll see.
Well, John, I know what you're saying about the timing. Obviously, that's the hardest part. Although, let's say we head forward 10 years from now. Are there some things that you feel we can extrapolate? For example, we've seen declining inventories, reported deficits. Do you think that compounds and maybe we end up with something similar to the cocoa situation? Similarly, we know the precarious dynamics between debt loads, the Federal Reserve. Do you think we've reached a point where 10 years from now, the average Americans that are buying NVIDIA right now have purchased silver for investment? Anything of some of these bigger shifts that we're seeing and seeing some impact of now, but anything that you can put your fingers on of how it actually plays out with some imbalances seemingly building that have to be addressed at some point, and maybe have some thoughts on how that might occur?
Yeah, listen, the guys that are buying the video right now and the S&P 500, they weren't deterred with the 5% interest rate. So if they were deterred by tripling of the interest rates, they surely would not be deterred by another doubling of the interest rates. These are the power that be that literally control the printing press. I mean, if you can have Afghanistan with $100 billion arms and you have the border in check, who's watching the Fed? And so it's my view that the king of the castle are literally printing to buy these assets. I mean, their wealth is not managed. It's not measured by how many paper money they own. They have their face printed on it. So so they have to. So their wealth is measured by the real estate holdings, by the artificial intelligence, by the nanotechnologies, by the media companies, by the internet assets. So that's why they're buying S&P 500 through the disguise of plunge protection team and Vanguard's ETFs and Blackstone and State Streets. I don't see the debt bomb ignite. I mean, remember back in the days of Kendra Winter, I got to post this question with Robert Prichter when that was 10,000, so it's going to go to 1,000 and go to 100, right? But the currency, again, is a voucher system. It is a pretense. It is a game, monopoly. It's imagine you're playing with a house that the house can literally print whatever at times of need. So it's just a storyline that really like Chris, if you want to borrow $1 million, buy a condo, right? You have to go through this check and balance, right? But the guys behind the scenes, there is a journal entry. They can buy whatever they want, so long as it's not too obvious. And which is now we're to the point, and nobody talk about paying down the debt and deficit spending. Like, nobody talk about it anymore. Just said we're approaching that point of no return. So I
We
don't see
still
this.
talk about it here, John. So there is one place where you can feel welcome to speak.
Yeah. So I think what's going to drive silver and gold a lot higher is silver uptake is going to be driven by gold, and both of these market is going to be driven by the fractious nature of the world economies. And also, I mean, right now, basically looking at the West has declared another opium war on Russia and China. They want to pillage, their markets and taking stakes in their strategic sectors, in pharmaceuticals, in whatever. And so the Chinese and Russia are not playing that game, and these are large economies. So it's the central bank diversifications and also the mandates of the digital currency. The euro is gonna the digital euro is coming online next year in 2025. The white paper is being published, and China will soon follow. And a lot of the guys are just not going to play this game, so they are secretly, quietly accumulating the physical metal, which is the only way to circumvent that. And why would they be afraid? As I mentioned, back in the days when nobody has money, when you can buy a piece of land for. I remember what my father told me back 100 years ago when Taiwan, nobody lived in Taiwan, you can pick between an umbrella and a piece of land. Nobody cares, right? So now there's a saturation of money. So now with saturation of money, people want another way to mandate controls, and that's through carbon credits and digital currency. Unfortunately, once digital currency is fully adopted, you're gonna be on a diet on what you can, not just what you can eat, but where you can go, and when you can go, and how far you can go, and how much gold and silver you can buy, because it's so easy, right? The Kitcos, the bullion, the gold vaults, and the JNMs, the JM bullions. There's only a handful of bullion shops, so they can easily control that. We're back in 1913 and 1970 with the gold window again. So I think people will see that, and we're going to see a big run up in gold and silver. I would say in the next 2 years is now or never. And unfortunately, once this imposition of digital currency come in place, it may be too late. At that time, what will happen? I don't know. It will be in a totally different world, which I don't envy to be in. So for the first time in 15 years, I started buying gold and silver again. Last time I bought gold and silver was 2000. First time 2005, second time 2015. I remember it quite well because I was buying silver at $18. 2015, and then 4 years later, silver went to 50. I was like quite happy, but I didn't sell. But I think 2011, 2012, in any case, now I'm buying gold again, 1800, 1850. We bought quite a lot of gold, and this is a forever trade. This is put the gold and silver, stash it in your bowl. You don't have to take a second look at it. It's when the shit hit the fans. You have there, like, imagine. I don't know if you know, Chris, I think it was about 6 months ago, there was an event where the blackout of all the ATM system in Las Vegas, right? And also the blackout of Pakistan's country, half the country got blacked out. It's on the wall. They are rehearsing these episodes. you certainly want to be stuck when the ATM don't work anymore, when the internet gets shut down. You just want to prepare had the day you have some physical there. God forbid doesn't happen, but if it does happen, you're in a commanding position to take advantage. The world is your oyster. There's whenever there's a crisis, there's always an opportunity.
Well, I like to think that's the case. And I mean, you can go through historically, even the Great Depression or other times there was a financial panic. And I try to adopt that mindset as much that the world is going to change. And as we adapt along with that, rather than sticking to what we want, can go a long way. And yeah, especially when you look at what's happening now between geopolitics, the way things are being automated through AI. I'm sure people say this in any generation that, wow, the next 10 years, we're going to see changes unlike we've seen before, although certainly
Very scary.
lining up to be the case now. And we won't get into some of the military conflicts going on that just pile on top of that. But John, perhaps in wrapping up, you could just give us an update of how things are coming along with your company, Silver Elephant Mining, where last year when we recorded our last interview, you were just getting set. You had a new deal to ship ore to Andean Precious Metals, and that has been happening. And also seems like you're on track to hit some of those escalators as well. So perhaps you could give us an update on that and how things have come along in the past couple of months.
Certainly. Sometimes people underestimate, or they don't even estimate or think about at all of how fragile this digital world is. If an airplane can disappear in the middle of nowhere, a 747, what is to say that digits won't disappear from your bank account? And what is it for you to say that while you're jaywalking, right, all of a sudden your account, right, got ducked a couple $100. We're into a very uncharted territory with this digital surveillance and this digital system. You want to opt out? It's very, very scary. Like, I'm a Taiwanese citizen, but when I land in the United States, take a flight from Seattle to Houston, I like literally the guy didn't like I scanned my face, right, to board. Like, there's not even boarding pass anymore, and they know who I am and where about my ticket. Think about, just marinate that for a minute. So if you go somewhere you're not supposed to go, if you go to a rally where you're not supposed to go, or if you're married in a strip club, like, there's a lot of social faux pas, and the government don't want, like, or government impose a curfew for whatever reason, you step out of the, and the Google tracks you exactly how many places you go. Oh, they know exactly where you are. It's very scary world out there. I'm just saying, buy some gold and silver. These are anonymous of money that you want to keep. Definitely, you don't want to. It's a scary world out there. Let's talk about Silver Elephant. Our stock has doubled, but we're still below our trailing behind our peers in valuation. Part of that is we haven't diluted ourselves. The company received 2.5 million US dollars since we signed the deal with India Mining 6 months ago. So we only did a small financing to pay off directors' debt, 3% dilution, about $300,000. So we've been doing very well. We're super busy. The company is doing about 700 ton per day operation right now, scraping the surface of our Paca project, which is a high-grade oxide. And then the 700 ton that is trucked to India Mining's processing facilities, about 150 kilometers from where we are. The production is peaking at right now at about 1,200 ton per day. So in terms of gross extraction of silver, we are at the run rate of about 1.5 million ounces silver per year. Granted, it is a fixed value contract of between $5 to $7 million. So our upside, our most upside is 7 million US. But at the same time, all of our expenses are reimbursed. So I think it's a good deal for them. I mean, they're certainly happy laughing their way to the bank right now with the current silver price. But it is also a good deal for us in that we preserve our share count and we preserve our shareholder value. So even though our stock is double, but we're still less than $20 million market cap, whereas our peers is triple. Well, our peers is also double in share price, but their valuation is double of what we are of what we are right now. Not because they've done more work, just because they issued a boatload of shares. Going forward, we're going to stabilize production here at around 20,000 ton per month, about 1.5 million ounces gross per year. And I think that would put us, a mid-tier silver producer. And then continuing further, we're continue to receive another $3 million of payments throughout this year and next year. So we'll pay our bills. And then we are looking to permit our a plant at the Pulacayo, which will happen early next year. And from there, we'll be able to commence our sulfide operation. Keep in mind the oxide which we're shipping to India, which is tailor fit for their oxide mining processing facility. It's only the scraping of the surface. It's less than 8% of our silver in the ground. The crown jewel has always been the sulfide. So towards the next year, when we expose the sulfide after the sort of the first phase of the Andean operation in scraping of the oxide, then we'll be able to benefit that Andean's operation by going after the sulfide, which is not part of the Indian's operation. And then the sulfide revenue would then be a direct leverage to the rising silver prices. So we're very happy. We're debt-free. We have a very strong local community support. We're one of the largest employer. I think we're the largest employer of Pulacayo Township right now. Everybody's happy. The locals getting their stipends, the towns getting their revenues, and the government getting their royalties. So I think that I'm safe to say that the worst is over, even though the shares doubled from the bottom about 3 months ago, but we're still 80% from the top. So I think there's still a lot of upside and watching a lot more news to come for Silver Elephant.
Yeah, and John, could you just touch on the escalators that were part of the deal at 28 and $32 as well, and how those are on track right now?
Certainly. So the deal is a $5 million net to Silver Elephant over the next 3 years by shipping to India 800,000 tons of silver, which is about 8 million ounces. There is an escalator, much like we're in anticipation of silver going up. So there's $1 million payment, extra bonus payment if silver were to trade over 250 days, averaging over $28. And then another $1 million if a silver average over $32 for another 150 days. So if you were to count the clock probably started, I would say probably around March, when silver went over 26. And then because silver right now is around 30 and went to a high as 32. So certainly chances are that Elephant's gonna get another $1 million bonus payment for the escalator met. And then if silver stays average over $32 for 2025, then we're going to get another $1 million in addition to the other $2 million to be paid by Indian. So certainly pays the bill. We're being very conservative. We haven't done a whole lot of marketing. You haven't heard about us too much. We're just so busy right now. I mean, we have upwards of 50, 60 trucks that are going back and forth. If you go to our Silver Elephant homepage, there is a 30-second short. You can see the current active mining operation going on. It is a bona fide operation now, Chris. The company has come a long way, and we appreciate investors' patience and shareholders' patience in getting to where we are. Certainly nothing in the closet, nothing hidden in the closet, and it's just a function of steadily chewing away some of the investors that gave up the hope and for whatever reason, either they kicked the bucket or just ran out of patience. You've seen this is April, a month ago. And we have, half a dozen set of excavators that are digging right now on site every day. So we're very ecstatic about the situation. We're also very appreciative of the support from all the stakeholders.
Well, John, I'm really happy to see how things have come along, especially that now you have this ore being shipped and have the benefit of the higher prices. So it's been a tough couple of years for many in the mining sector, but
Oh, yes.
really encouraging to see how things have come together here. So I congratulate you on that. And perhaps just in wrapping up, you can let folks know how they can find more information about the company. And also, I'll pull up your Twitter page as well.
Certainly. SilverElephant.com is our homepage. You can look me up, John Lee Silver Elephant on Twitter. I used to be very active, and I've been used to write hundreds of articles at Kitco. I don't do that much anymore. But you can see my market analysis at my Twitter handle, which is really my passion. And I'm calling for a lot higher interest rates. That is really my number one call in the next 6 months. It's higher confidence level than even silver going to 50, because very rare do you see the cartel's interest in the natural fundamental interest aligned, which is much higher interest rates going forward. Chris.
Well, I think especially on the long end of the curve, we may well be seeing that. So will be fun to catch up in a couple of months and pick this up again. But John,